purpose of this video assignment is to investigate how terrorism attacks affect on the financial market. In the financial world, terrorism acts create uncertainty, reduce confidence, and increase risk perceptions, and hence risk premiums, which leads to lower rates of investment, trade, and economic growth. A study conducted by Abadi and Gardiazabal argued that higher levels of terrorism risk are associated with lower levels of net foreign direct investments. On September 11, 2001, a group of extremists hijacked 4 planes that were flying above the U.S. 2 of them were flown into the Twin Towers of the World Trade Center in New York City. Another was crashed into the Pentagon, the top military building in the capital city, Washington, D.C. September 11, the terrorist attack were the deadliest terrorist act in history, the most devastating foreign attack on American soil since the attack on Pearl Harbor on December 7, 1941. 2,996 people were killed, including 19 terrorists, and more than 6,000 others were injured on that day. The financial market in the United States has long been seen as the leader of global financial market, which basically means that the world economy is being led by the United States. For instance, the September 11, 2001 terrorist attack not only did it affect the U.S. stock market adversely, but the global capital market as well. The one-day abnormal returns are presented graphically in this picture for the 10 capital markets with the largest market capitalizations. These markets are arranged from the largest to the smallest and show that the decline in the U.S. capital market, though significantly different from zero, was not as great as 8 of the other 9 largest world markets, the exception being Toronto. There also appears to be an inverse correlation between a market size and its depth of decline. On the event day, the largest market appeared to drop the least. It should be noted, however, that it could be the case that U.S. capital markets recover better than any global market because U.S. capital markets were closed for 4 trading days following the September 11th attacks. While it's unobservable, it is possible that the elapsed time had a calming effect as investors were able to take additional time to absorb the news of the attack and not panic. It is also possible that U.S. investors boost stocks higher than they would have been otherwise because of an increased emotional patriotic response. And it was reported that international stock markets, particularly those in Europe, responded closely to United States stock market shocks in the period following the crisis. The impact of September 11 varies across geographic regions. Depending on the degree of the integration into the global economy, less integrated regions such as Middle East and North Africa seem to be less exposed to the crisis. Therefore, I conclude that terrorist attacks and military invasions have a great potential to affect capital markets around the world in a short period of time. As there is extreme stock price volatility, as anxious investors sell to exhaust their panic while buyers remain on the sidelines until they build up enough courage to re-enter the market.